Welcome, welcome, welcome to the Bath Property Symposium, a celebration of all aspects of the dynamic property sector in Bath, headline sponsored by Druce. Some hundreds of you joining today, and thank you. This is a unique opportunity to come together, and we really do need that, at the biggest gathering of the property professionals in the city since our Bath Property Awards in those pre-lapsarian days of November 2019, when we had so many convivial business meetings and much good business was done. Those good days will return. It's a question of when. We've all been figuring out our way through these continuingly weird times, and now all of us are gearing up for the great reset and the better times ahead which are coming. It's time to get active, to generate the new business that we all need. The Media Clash, for us, at the core is Bath Life, celebrating the best of this city, issue in, issue out. We're something of a barometer of the city, and I'm proud to say that we'll be publishing our biggest issue at the end of the month in more than 12 months. Bath's recovery is well underway. Advance warning, really advance warning. Next year is our 20th anniversary. Too bloody right we'll be celebrating it. Then there's our virtual Bath Life business surgeries, deep dive explorations of companies' expertise, such as the hybrid work session, March 24th with Data Sharp, and our business clubs. Panel sessions, the next one is on new businesses on April the 8th. And on April the 19th, we're running a special symposium for the hospitality sector, Crumbs Takeaway, a sector which we know is about to be renaissance, having had such a tough time. And of course, for this area, of course, in real life, we're returning with our Bath Life Awards featuring a number of property companies and, of course, our Bath Property Awards subsequently. We'll come on to that later. For today, this is our symposium, our Bath Property Symposium, in 3 parts. Our keynote session shortly is with Druce, the Senior Research Analyst at Knight Frank. Look out for some powerful, detailed insights on resi property trends. This thought leadership section is sponsored by Interaction, and we'll be hearing from them shortly too. There's then networking hubs from 3 o'clock, special areas for each sponsors, 2 categories, one at 3 o'clock, one at 3:20, and they're open to everyone. Please do avail yourself of the facilities, as they say. It is a great chance to meet, to talk, to rekindle those relationships which we've all been missing in this obvious, terrible time. They're a great chance to network. It's a bit like popping into a box, a hospitality box at Bath Rugby. Pop in and say hello. And then we have our Bath Property Awards from 4 p.m. Thank you for all of your support. First up, let's hear from Vera Hobhouse, Bath's MP. Vera.
Good afternoon, everybody, and a very warm welcome to the Bath Property Symposium, which includes the Bath Property Awards. I know this is a very exciting opportunity for all of you to come together, particularly in such difficult circumstances that we find ourselves still in, that we can't really meet in a room together. So it is a great opportunity to do something new and innovative. And I'm sure it will work for you, and it will be a fantastic opportunity for you to network, to discuss the challenges and the opportunities that your sector has. Of course, the last year has been exceptionally difficult, and everybody will acknowledge that. And I want to really welcome that your sector has responded in a very responsible way. And I always call it the Bath spirit way, recognizing the difficulties, especially also for your workforce and for your staff, and ultimately having a compassionate response, which I think is very much what the city of Bath has done in response to COVID. And I want to thank you all for what you have done. Looking ahead, of course, there are challenges and opportunities. Let's first start with the opportunities. We all know that Bath is such a beautiful city to live in. It has got fabulous surroundings, so quality of life for those who live in the city is next to none. And people continue to want to come and live and work in our city. It's not just about the beautiful architecture. I want to also mention how important the quality of life in terms of community is. We look out for each other, and I think again the way the community has responded to the COVID crisis has been exceptional. And we are really a city that is cohesive, where we are looking out for each other, where we understand the challenges and indeed the opportunities. We have got the fantastic opportunities of being next to a bigger city, but of course that also means that we need to punch our own weight and make sure that business opportunities particularly come to us. But we have challenges for our transport links. The city itself has made its focus to respond to the climate emergency. So we want to be not just a historic city, we want to be also a forward-looking city into the future with its challenges to get to net zero. And that has its challenges in terms of transport. We need to encourage people towards active travel and away from their car usage. Again, a difficulty for responding to the COVID crisis, but to create the right environment of where people live and work together with meaningful transport links is an opportunity and a challenge. We have a lack of affordable housing. We know that Bath is very attractive for people to come here, and that always then at some point sees the squeezing out of people who cannot afford to live in our city. And we need to put our minds to that and be a compassionate city as well as a competitive city. So there are so many opportunities that we have. We also have got an issue with our student population. Again, I think it is very exciting that we have 2 successful universities here in our city, but for housing, and making sure that we create the right balance between the people, the young people who want to come and study here and those people who are here is a challenge and an opportunity. And similarly, of course, the huge number of tourists that we usually see come into our city for the property sector, an opportunity, but as for our city to make sure that everybody is being looked after and well provided for, also a challenge. So I wish you a very good event. I'm looking forward to the winners of your awards, and I hope very much that this is a fantastic opportunity for you to network, to discuss your challenges, to look forward to the future, and see the wonderful opportunities that our city presents to you and your sector.
Thank you, Vera. It's excellent to have your endorsement for these events, these awards, and for you to outline, as you have, the challenges and opportunities, multiple opportunities for the property sector in Bath. Now on to our headline sponsor, Mojas Druce. Perhaps if Alison Treble would like to come to the screen, we'll have a few words. Alison, good afternoon.
Hi.
Yeah, how are you doing?
Very well, thank you. Very well, nice to be here.
Yeah, good. And how's the year looking for Mojas Druce? I guess almost each week, certainly each month, you're having to sort of recalibrate. But what's your current view of the year?
So at the moment, it's really positive. I know that all businesses went through particularly challenging times, and certainly there were times when it felt like things were changing minute by minute rather than week by week. And we weren't any different to that. We responded to everything as quickly as we could, and it's been a really, really useful time actually to reevaluate a lot of what we did and streamline as much as possible, which I'm sure a lot of other businesses were doing as well. Where we are now, all of our teams are growing. We're looking to grow all of the teams across the business. On the residential side, which is where I am, then we've brought in Patrick, who I know you'll hear from later, and what that does is offers us on the residential side insight that we haven't had before in terms of what agents look for, how we can make their lives easier, how we can all work together, which better meets not only the needs of the agents, but those of our clients as well. So that's a really exciting prospect that we've got going on at the moment. And I spoke to a client only a couple of days ago who had been with us pre-COVID, if we can remember when that was, because that feels like a long time ago. And he's been with us all through the lockdowns, and now that we're coming out the other side, he's got some other projects that he'd like us to be involved in. And what was really lovely about that was that he'd said that, and completely unprompted, I have to add, I haven't bribed him or anything, but what he said was that he really felt that we hadn't lost our sense of identity through everything that was going on, and that we haven't lost our sense of fun or our vibrancy. And that's really important to hear when within lockdown, everybody's felt you sort of hunker down and stay put. And actually, the fact that we've been able to be out there, albeit in a very different way, is massively important and makes me proud that we're doing something very right.
Very good for you. We're also very proud that you're our headline sponsor for the Bath Property Awards this year again. So thank you. One last question to you. With the many dozens waiting expectantly, any messages for our finalists today?
So I hope, first of all, everybody's practiced their Oscars clapping, where you have to pretend you're not disappointed if you haven't won. But please take it as an opportunity to be proud of what you've achieved in what has been a very difficult year. It seems obvious, but please take the time to say thank you to everybody that works with you and has helped you get there. Because again, whilst everybody's remote, sometimes it's not as easy to do that as it should be. And enjoy the afternoon. We're really pleased to be part of it, and we hope that we can help everybody celebrate face-to-face later on in the year.
Well, really good. Talking of saying thank you, but perhaps just prior to you going, I did just want to say this to you and to the Mojus Druce team. Once it was apparent that we couldn't run these awards in real life for all the obvious reasons as we would have wished, we decided to evolve them into this much bigger scale virtual symposium. And in all our discussions, Mojus Druce were steadfast and supportive. So thank you. And thank you for everyone. Thank you, Alison, and thank you everyone joining us today. Thank you. Right, now let's hear from our thought leadership sponsor, Interaction. I hope we'll have Hayley join us from Interaction on screen. Because Interaction are the sponsor of this thought leadership section, and I'm sure that any moment now, through the wonders of technology, we shall see Hayley, and if we don't, we can come back to her at a later point. And I think we're going to see her very shortly. There we are. Hayley, you gave me the merest frisson of doubt there. I thought you weren't going to appear. It's not you, it's the technology.
I would say I was here, I'm not sure.
You're there, and I'm sure you've been there a while. So how's Interaction been in these times?
Yeah, we've been good, thanks. All right, thank you. I mean, like most people can relate to, it's been a crazy 12 months. We kind of got over that moment right at the early stages of lockdown when it was very quickly being reported that the office was dead. And for those of you that don't know what we do, we're a research-led office design and build company. So build those offices that were dead. But that kind of very quickly changed to it being very much that the office was not dead, and it's been a very, very kind of talked about subject and debated. So that's been great for us. We've been able to do lots of knowledge sharing and thought leadership, and we really do kind of believe business kind of offices will be better than before. And yeah, it's been a busy start to the year. Lots of businesses coming through and really thinking about how they're going to shape their spaces this year to welcome people back.
And talking about that, Interaction, we had a great session with them as a Bath Life Business Surgery on the sort of, office of the future, what it's going to be like to navigate those times. And it relates to the one we've got with DataSharp coming up shortly about the hybrid working model. And I just wanted to ask you this, Hayley, from your perspective. There's an obvious read across from Interaction being a highly thoughtful company to sponsoring this thought leadership session. What would you give as advice to people listening to this about keeping your thinking fresh?
Yeah, I mean, doing things like this is really important to kind of help you connect with other businesses, and I suppose getting involved in discussions, understand what people are thinking and how their businesses are evolving themselves. You kind of need to be open to new ideas. We want to support things like this, when we can. So you kind of get these moments, especially when the live ones come back. I suppose we're evidently in a fast changing world, so you have to keep evolving and what you do and how you do it. You guys have seen that with how you have had to run your events, and you've quickly had to change and shape things. You kind of, I suppose sharing your knowledge and be curious about what others have to say in response to that as well. I suppose the other thing is, when you're expanding and you're taking on new people, let them bring in your fresh ideas, be open to change. We all have to advise businesses, and we want to demonstrate our expertise and knowledge. But you've got to show that it's not kind of dated knowledge, and you're right, you need to be kind of fresh and thinking, I suppose, to prove that you offer something different.
Well, thank you to Interaction for sponsoring our thought leadership section. And also on a personal note, Hayley, congrats. I think you've just celebrated your 25th year with Interaction, which is excellent. So good for you, good for Interaction. Thank you.
No worries. Thanks so much.
Thank you. Let's come on to our keynote. Our keynote speaker is Chris Druce, Senior Research Analyst in Knight Frank's residential research team, specialising in the UK property market outside of the capital. Chris was previously a business journalist and news editor, Property Week, Motor Transport and Commercial Motor, senior roles at Hotel Report and Caterer and Hotel Keeper too. We asked him to analyse the trends during 2020 and into this year, both nationally and regionally, and then to project them forward. And that's the key. Project forward this year what the trends might be, what to look out for. We're delighted to say he's stepped up effortlessly to this challenge. So here's Chris Druce. Thank you.
Hello, thank you, Greg. Yes, Chris Druce, Senior Research Analyst at Knight Frank, and very nice to be with you today, albeit virtually. Unfortunately, I'm going to take the next sort of 20-25 minutes just to really take stock of what has been an extraordinary year, really, in terms of the property market, pick out or unpick some key trends, and just give our view really on where we think we are heading next. I was originally supposed to be with you this Sunday in beautiful Bath, running the half marathon. And of course, like so many events, like life itself this year, it's been rescheduled for later on. But if you'll indulge me to stretch the sporting analogy, I think very much this past year, as we approach the anniversary of the first lockdown, of course, has very much felt, hasn't it, like it's become a marathon. I mean, perhaps when we went into the first lockdown at the end of last March, we were expecting it to be more of a sprint. It's worth recounting, of course, that the property market in an unprecedented move was closed for 8 weeks of last year. It reopened on the 13th of May in England, a little bit later in Scotland and other parts of the UK. And it was a pivotal point, I think, as we all went into lockdown and wondered what came next and what way was up really and what was happening. Of course, we all spent a lot of time in our homes, put quite simply. And we had the time and asked ourselves, actually, does my home still work for me the way I want it to? Is the lifestyle that it provides the one that I will want when we come out of this period as we move along? And for a lot of people, the question was, no, it's time for a change. This is the catalyst that I need to change. And last year's story was very much one of pent-up demand. We saw that released as the market opened. It built and built. Good deals were done. That gave faith to sellers to join, and predictions of just an initial blip came not to pass, and that momentum built, and it was just a steady build throughout the year, even to the point where we got to second lockdown in November, and it didn't really, the market didn't really even sort of pause for thought there. It just kept going. It has changed at the beginning of this year with the third national lockdown. We have perhaps switched slightly at the moment to a period of pent-up supply. We've obviously had a number of factors changing with the budget recently that we think will now be quite significant in unlocking the market, which I will get onto later. But it is worth remembering where we've come from. As you can see that huge dip as the market was closed. These are transactions. April down 57% year on year to just over 42,000 property sales in the UK. Unprecedented, really, in that respect. But transactions recover from that low point to over the million mark by the end of 2020. As we've said, the market was closed for roughly 15% of the year. It just shows the sort of pent-up demand that was there and the remarkable performance. In the end, for 2020, transactions overall are down by about 11%. This story sees UK property prices hit a record high. I don't think any of us thought that when we went into the first lockdown. As you can see, very strong performance across the regions. And in fact, UK price growth was similar to England's there at 8.5%, taking the average price to just over £252,000. The Northwest, the top performing region there, but a strong showing all around. And as we can see, the Southwest as well put in a very strong performance. And the theme for this past year was really the pursuit of space and greenery. This was the fundamental driver that a lot of people were looking for. And we can also see this when we look at the performance of particular property types over the last year. As you can see there, detached houses come top in that respect. New homes as well, just quickly touch on those. Housing delivery, although still below where the government would like it to be, had been building and picking up nicely ahead of the pandemic. This data is actually based on energy performance certificates. It's what, when you're now building a new house, you would apply for. So it's a good leading indicator. So housing delivery did pick up, but it does look set now to fall. You can see the blue diamond on the right there. The amount of certificates applied for is down. As a consequence, of course, of construction being halted, well-documented supply chain issues, even when it did reopen, and some labour issues as well. We think this will probably support pricing in the new homes market as these homes come through the pipeline. Interestingly, perhaps the only part of the property market not really to have its day in the sun last year was the prime central London market. It is more than any other part of the residential market in the UK very closely linked to the fortunes of international buyers. And of course, people simply haven't been able to get over here. We've quite rightly had travel restrictions in place. It meant that a fall that occurred in the first lockdown of about 4.4% was actually never recovered. Prime central London has been in a holding pattern, a bit like a plane circling, trying to land. It has just missed the impetus of the international buyers. It is not a coincidence that flights into Heathrow are about 80 to 90% down month on month, and that transactions in prime central London were probably down approximately 20% in the year to February. Other parts of London have performed well, especially at the suburbs, again on that very regular theme of offering more space and more greenery in that respect. And the international element is of interest, of course, to Bath. This is actually a breakdown of the buyers by demographic, essentially, or region from our own office that trades in Bath. And what you can see, blue being 2020, red being 2019, is a significant decrease in international buyers. Now, often in Bath, these although they're international, they can be expat making a return to the UK. But from 28% of sales in 2019 to just 5% in 2020. And that figure is normally pretty consistent if you look at the long run, as is the London figure. I mean, it ticked up slightly last year, and it's an important part of the market. Where I suppose with the dearth of the international buyers last year, where that has been filled is a massive increase in buyers from the southwest region, up to 65%, which is well above the usual average. And that helped Bath to a really strong performance last year in the market, as you can see here. But Baines, the wider area, essentially saw the strongest growth it's probably had in about 16 years since 2004. And again, reinforcing that idea of space, detached houses, obviously in short supply in Bath, they were nevertheless the property type that saw the strongest growth, up 13.5% in the year to December. Average price just over 628,000, and you can also see the average price of a property there ticking up. And if we look a little bit closer at this map of where activity was, it's all market data drawn from several sources. We can see a few real hotspots around the Lansdowne area, very popular for schooling, with Kingswood School up there. South of the river, with the sort of north-south divide of Bath, we can see Bathwick had a suitable volume and some of the sort of bigger deals there. And of course that serves Monkton Combe School, others in that area, and of course is good for access to the railway. We of course now have a new faster service into Paddington. I've not been able to enjoy it yet myself, but I'm told if you get the right train, it can get you in an hour and a quarter now, and that is proving popular. And on the theme, we've been exploring Bathampton, quite a lot of volume there, and that is very much an area, of course, of family homes, which are a little way from the centre of town, so offering that space and privacy. Now, I've jumped ahead a little bit there, sorry, but we saw a number of elements of behavioural change last year, and very much what happened because of the pandemic, and not in spite of it, so to speak. So these have a permanency. I think they're going to continue, and we as a business very much did definitely see an escape to the country. We had a record amount of offers in our country business. It definitely led the initial recovery. It wasn't overhyped. That focus definitely on rural markets in that respect. Space, again, we've touched on it. Space was across the market very much what people were looking for. In our own business, the number of exchanges that occurred in the year of detached houses was at a 3-year high for us. The figure was about 50% of all our sales, which was up from 46.4% in the previous year. Also, where prospective buyers registered with us and they gave a reason for doing so, upsizing as that reason was at a 5-year high. Buyers were also a lot more focused this year, we found. It's been going that way for a while. Of course, we all use technology much more now, but we found that when they did turn up, they had done their homework. They weren't mucking around. Obviously, there were restrictions on viewings, but out of interest from our sales made last year, 28% of them went to buyers that had only viewed the property the once and then decisively moved, and that was up from 17.8% in the previous year. Second homes were back on the menu. The bolt hole, the escape. People wanted somewhere that maybe they could have a change of scenery, or they could entertain family more easily. We saw quite an uptick from London-based buyers actually looking for second homes, up by more than 300%, and as a percentage of total second home sales, up from 13.4% in 2009 to 34.6% last year. And we also saw, whether it was a property, a bit of the town that had been overlooked, or even a region, we saw people reevaluate what they were looking for. There were plenty of stories of properties that had sat around longer than any of us would have liked on the market before, that suddenly post-pandemic ticked the right box and were snapped up. And East Anglia was an area for us which stood out. It had, as amongst our own prime country house index, the strongest growth in values in the 6 months to December. It was up by more than 17%. And it was a classic case of an area, although it has beauty and charm, that compared to other more obvious, maybe commuter spots, had been overlooked before because transport isn't quite as easy there, maybe not quite the same sort of services, but post-pandemic, very much in demand. And already some of the speakers have mentioned it, of course, with the whole question around working from home and the hybrid model. People were much more willing to examine areas where you would have greater affordability for the reasons that I've just outlined, knowing full well that they wouldn't necessarily be commuting into the office every day. So we have seen search areas stretched throughout the year. And just lastly, Canary Wharf, yes, as said, the office is not dead. London is very much, will make a strong comeback, we're sure. In our Canary Wharf office, rental values, nevertheless, due to a glut of supply, were down about 15% last year. And people have taken advantage of these cheaper rents. And they have been planning their post-pandemic commute. They have been a definite uptick in people taking rental space in Canary Wharf because it will mean that they can walk to work or get to work with minimal use of public transport when we all get back to our form of normality. And to that end, viewings in Q4 at our Canary Wharf office were up 124% against a London average of 53%. And the new tenancies started were up 58% against an average of 28. Now, we've just mentioned it. I think a lot of things such as work from home and conversations around there are going to be fascinating to look at in the next year. Here we have the response. We did a sentiment survey last month asking people how they felt after the third lockdown, which 500 plus of our clients responded to. And when we asked them essentially whether they would be looking to work from home more frequently than they did pre-pandemic, well, you can see quite clearly 65% gave a resounding yes. Now that's up from 53% when we asked the same question in May. Loads of high-profile names, PwC, Virgin Media, Lloyds and Deutsche Bank, they're all looking at this hybrid model. And while it will bring challenges and it might not suit all industries, I also think it does bring a lot of opportunities and potential for the wider UK residential market, as touched on, for areas that perhaps have been passed over before for various reasons because they don't conform necessarily to the stereotypical commuter spot or commuting distance. It's going to be a really interesting one that plays out. Won't be surprised to find that gardens, broadband and more space generally were our most popular aspects when we asked people what was most important to them here and now looking to buy a home. Garden and broadband polling 72% said it was more important following the latest lockdown. Privacy with 57% up there as well. And interesting because we've missed out on the restaurants, theatres and cultural attractions. I personally hope that won't be a long-term thing, but obviously had become slightly less important logically because we can't actually go to any of them at the moment. A few more factors that we think are going to be enduring. People are still looking to move. That's a positive story for us. We certainly, talking from our point of view, we have more buyers than we have properties at the moment. Prospective buyers that have registered with us are still well above our 5-year average in our business. We're seeing offers becoming exchanges. We believe, and I'll get onto that the market will shortly be unlocked because of some of the policy decisions that have happened. The escape to the country, though, doesn't look like it's completely run its course yet. We asked people, and 38% were still considering a move to the country. And interestingly, there is popular support for virtual viewings. When we asked people if they would still like to use them once the requirement to do so ended, well, 42% said yes. It's become a useful part of the toolkit, I think, for all of us. And the bank of mum and dad, as I'll call it, the pandemic has largely not affected people's ability to help family members with purchasing. And in fact, 15% said it had actually even increased their ability to do so in that respect. Now, the budget, wildly trailed, so maybe full of less surprises than we thought we might get. But furlough, of course, has been extended until September. Now, we never quite prescribed to the narrative that when furlough finished, house prices would crash. We thought that was a little simplistic, but it has been a very successful support measure. It's kept unemployment in around about 5.5% at the moment. So it is welcome, and of course, as wildly trailed, although we weren't expecting the taper, stamp duty extension. Ideally, we would like to get back, I think, to a situation where the supply and demand in the market is dictated a bit more by the calendar rather than the tax year. But without doubt, it's fair. There would have been people that missed out on completing in the time frame through no fault of their own because of the widely publicised issues with just the volume that's going through the system. So interestingly, come June, we then get the taper that puts the threshold back down to 250,000. It avoids a cliff edge to a degree, although bearing in mind if you are buying, for example, a house of, say, £500,000, you're still going to be paying a tax bill of £12,500. But it's welcome. The Chancellor has listened, and it also delivers a certain finality. We now know it won't be extended again, and the market can work on getting back to normality. And there was also 25% mortgage guarantee announced. Traditionally, these measures, although very welcome for a part of the market that has struggled, traditionally they have struggled to get buy-in. But I read just earlier today that actually 12 lenders now are backing this. So that is a positive step. And the OBR, at the same time, the budget has revised down its forecasts for unemployment from the peak of from 7.5% when they last forecast in November to 6.5%. Of course, you buy a property with your heart and your head. There's a large amount of sentiment in it, and this is important to keep that protected in that sense. Forgive me, technical problems here. And those OBR forecasts, well, just quickly, they've revised down growth, of course, in 2021, down from 5.5% due to the third national lockdown, but they have revised it up for next year to 7.3%. It was previously 6.6%. And we also expect to have recovered to post-pandemic levels by the second quarter of 2022, and that is actually 6 months ahead of what they've previously said. So green shoots, and it's moving in the right direction. Now, given all these measures, where next? Well, we have just revised our own house price forecasts. We last did this in January. It's been such a roller coaster. We've perhaps been doing this more frequently than we normally would. The takeaway, we've revised them up. I think this year, in conclusion, will be very much a sense of finality. We're going to see the end of the stamp duty holiday, hopefully the end of current restrictions. International travel will be back. As the stamp duty holiday finally elapses, we will probably see a return to more normal seasonal patterns of activity in the market. And if the vaccine rollout, and it's going well so far, we're ahead of 20 million, aren't we, continues to be a success, I think we will see what has been a defining requirement this year, kind of the search for outdoor space, maybe take slightly more of a backseat in that respect. The biggest change in the forecasts for the general market, for the UK market, we are now expecting prices to increase by 5% this year. We had them as flat in our previous forecast. We have also revised up growth in Greater London. However, we think with the stamp duty extension, that is to drive demand in lower value areas in that respect. And therefore, we think the UK general market overall will outperform Greater London. Prime Central London can't get a break at the moment. We've dropped a percentage point off the forecast for 2021, simply because those travel restrictions are still in place. We think it is long overdue for quite a price run. The market had a price correction back in 2016. It is lean, it is ready to go. It is a market that now has a lot of pent-up demand. In the longer term, we think this will be one of the strongest performing parts of the market. There is a 2% surcharge coming in April. We think that due to the unique situation we're in, a lot of that is probably already priced in because no one's been able to test the market. But that will be one to look for in that sense. And as continuing really, as you can see, for sort of prime out of London and the regional markets, we think that will continue to have a strong year for the reasons that we've outlined, really. For now, certainly space and greenery are still at the forefront of people's minds, and they will still continue to support that. The only other thing I will add is on the 23rd of March, the government is launching a lot of consultations around tax. One to keep an eye out for, has been sort of put up the flagpole a few times, is capital gains tax. If that is included as one of the consultation pieces, I think it's fair to say there would be an expectation that in some form it will be changed in the future. And if you remember, there has been talk about even harmonising it with income tax levels. That would have an impact on the rental market. If that happens, we could in the autumn see upwards rental pressure as some buy-to-let landlords decide now is a time to make an exit before that comes in. I hope that's been insightful. I hope that's been useful. I'm going to exit out of here and head back to Greg, who's going to just quiz me a bit more, I think.
Yes, Chris, I'm not sure about quizzing, but a couple of observations. So you've said that you point out the OBR rate of growth forecast for next year is up to 7.3%. This very fresh Knight Frank research promulgating the idea of 5% growth in house prices, and if anything, yet greater outside of London. So in non-technical research language, happy days?
We certainly never, we as a, on the forecasting side, there were a lot of very gloomy forecasts. We never ascribed to those. We certainly didn't see a massive price correction coming. We've looked at our own data, and it's actually been very strong during January and February, in the sense that we've had, as I mentioned in the presentation, actually, prospective buyers are up well above where we would expect them to be. Any buyers registering in recent weeks would be doing so with the expectation, really, of not benefiting from the previous stamp duty deadline. So there is a lot of demand there. The other thing that we think will be very important now is that, of course, the schools have gone back. I don't think anyone in their right mind, if you were trying to homeschool, would be wanting to put their house on the market unless they needed to. We think this will be really helpful. The vaccine program, of course, is rolling out at pace. We understandably had some clients that were a bit nervous about viewings then. So we were expecting March to be very important. Also, with the stamp duty announcement, we think that'll free up some supply. But yeah, I mean, basically, it is looking promising moving forward. It will, of course, have ups and downs, and there will be challenges and nuances. But yeah, we'll give it a thumbs up, I think.
We'll give it a thumbs up. We'll take that thumbs up, that's for sure. But from your point of view professionally, this must have been, frankly, the most challenging of years, trying to interpret and trying to forecast. Is that sort of good news because it means there's a greater premium on your insights and greater interest in your insights, or just a total mare because until fairly recently the path has not been clear? How have you approached it?
I think, like all our speakers that we were listening to from early, this has been a year of adaptation. And even as what we did as a research team has changed, and we moved to delivering things much more, I think, quickly and at pace, and we were even providing a daily service at one point. So I think basic principles apply. You keep your head and you analyse, but it's been really interesting, and I think as we've seen in the property market, we have made some changes, and some of them will revert, of course, when we go back to a more normal model. But some of them, and they'll be beneficial, will be kept, and they will be incorporated into the way we work. So wherever we come out of this experience, for all of us, I think it's not going to be quite the same as where we went in, and that's not necessarily a bad thing.
And here's a point that one of my colleagues from Media Clash, Harriet Dixon, has made. On most indicators, the Southwest, and perhaps Bath particularly, continues to outstrip other areas. You've touched on some of this, but just perhaps bring some of those points out. Why has the Southwest proved to be relatively robust, even in the poorer times, let alone with the great prospects going forwards?
Well, I think it's we're also seeing, I think the jobs market has changed. I mean, I think of we've had a great deal of success around the Bristol area. You've had a lot of, and I think the current pandemic is only going to accelerate that. We already have the government looking at moving civil service to various areas. Bristol's been very successful in acting as a satellite for professional services. It's not, I don't think it's one shot anymore. Although somewhere like London or some of the other major cities still has a lot of gravity, there is opportunity elsewhere. Of course, until the other thing is there is affordability. And I think when we were talking the other day, you touched on it, there is a particular quality of life that you can get in the Southwest. I can think one of our London agents relocated to Exeter and loves it. Again, we have seen a lot of people think about the life that they want to lead in the current pandemic. And that's just fed into what I think we've seen over a period of time, as well as with improving employment prospects, improving transport links, and so on, really.
And the Southwest has always been, for some long time, a beneficiary of the capital from capital, the flight of Londoners
yes,
to
indeed.
perhaps a better life in the Southwest. Do you think that's going to be perhaps more so than ever, that trend is going to be accelerated?
Well, we definitely, other than from buyers in the region upsizing, certainly southeast and London tend to be the region where we see most of the other external business coming from in that sense. For London, they've been able to do that because generally, of course, there's been a lot of accumulated wealth, and certainly we saw a continuation of that with people deciding to move forward, say their 5-year plan, that they would live in the city for a certain period of time, and essentially make the best of the asset that is accrued. So fundamentally, nothing I think has changed other than the pace of growth in London has slowed. But there are still people that are effectively equity rich that have that opportunity to do so if they so wish.
I'd like to step into an area which I'll caveat on your behalf. It's not your direct area of professional expertise, but I wonder what's your, and you've touched on this to some extent, what's your take on the effect of commercial properties and city centres of the bound to be continuing to some extent working from home factor? I think your own figures was 53% or so would expect to be working from home more. What effect will that have on a property? Not so much from a commuting point of view, but commercial property in city centres.
Well, I think it's, I was drawing on, a couple of our reports actually that we publish, the London report that looks at that market, and some of the key themes I think they drew out was one of reinvention and resilience. In terms of the office market, I think the feeling, and again, that was touched on earlier, is that working from home, to the contrary, has also focused people on the importance of the office for certain aspects, whether that be training, building a culture, etc. So demand will remain, but how we use the offices will be different. There was a big deal this week with IWG, who were formerly Regis, signing up Japanese telecoms group Nippon Telegraph and Telephone. Effectively, that's a hybrid model where they will be making use of their extensive workspace. But I think there is still something like £46 billion of capital waiting to be deployed into London's office market, for example. That's only marginally down on where it was year on year. It's very attractive for all the reasons that London is an international market. And I think that will continue. more broadly, yes, on the retail side of things, and I know, that's important in Bath as well. The term that sprang to mind was the changing of the guard. There's a lot of structural changes that were occurring anyway that have now been accelerated by the current situation. And it probably means, in that respect, that we'll have fewer square footage devoted to retail, but we'll have stronger retailers that are in those spaces. But for both aspects, certainly not over. It's going to be not without challenges, but it's going to be reinvention, I think, and rethinking what we need for those times when we are travelling in and changing our consumption and spending patterns, I think.
Well, to some extent, reinvention and rethinking is your stock in trade. It's what it is like to be an analyst in these times. Just in closing, a couple of observations. One, that point about the mass of capital there is out there. Capital has to find a home, one way or another. It will find a home. It will float into property in one form or another. Good of you, by the way, to give a shout out to Regis, IWG Group. They are one of our sponsors today. So inadvertently or not, that's a nice nod. But I think I also just want to say on our behalf, on everyone watching's behalf, thank you for your wisdom and insights today, and good luck in interpreting the year. Your presentation will be on YouTube subsequently. There's a lot of data and insight there, which I know people have found valuable live, but certainly to pore over as well. So to Chris, thank you very much indeed. Thank you. Very good. Thanks. Right, well, that concludes the first part of the Bath Property Symposium. Just ahead of 3 o'clock, about 10 minutes or so to go. Just to prove it's live, by the way, the cricket is 83 for 4. There you are. So it's not a record or anything like that. But anyway, ahead of 3 o'clock, please click on Sessions on the left side of your tabs for the sponsor hubs for networking. They're open networking sessions at 3 and 3:20. Open meaning you can go in, drop out, whatever, have a chat, see people. Our sponsors will be talking through some of the things that they've been doing. It's not like heavy sales or anything like that. It's updates and just sharing their own thoughts about these times. I've seen some of the other open networking sessions this morning, and they're just very valuable. It's just great for people to get together. Please then come back to the stage area for the Bath Property Awards, which start at bang on 4 p.m. We'll be on time. We'll run a short countdown clock ahead of the awards. Those sessions are starting in just a few minutes, so perhaps in the gap, do also check the expo part, which is open throughout the event with information about our sponsors. Enjoy your networking. Business starts with a conversation. Thank you.